Welcome to the Festival of Entrepreneurs, recorded live at the NEC in Birmingham. Over the next few minutes, you'll hear from some of the most incredible founders, investors, and business leaders who joined us this year.
My name's Gary Lennon. I am a co-owner of a company called Biz Britain, and we are one of the startup-owned business support partners, and we work on a national basis, which means we cover 4 countries in the UK. This is Anthony. Anthony, if you give us a bit of a background about yourself, and thank you to the people that heard this before, but didn't get to hear it all over again.
Yeah, I work for Startup Loans, part of British Business Bank, and I am broadly responsible for the operational lending, credit, those sorts of areas. So basically, getting the money that our apps need out to them as quickly as possible to start their businesses.
Thank you. So when we first started, it was kind of like a very small group of us. It was actually me, Anthony, Dave, and Aisha joined us, and so there was 4 of you. So what we'll do is we'll go through the process of what we tend to do is to talk about how startup owners can help you potentially, and we're here to answer any questions that you have today. You're not going to get a great insight inside to the background of startup owners and fancy. It's like Black Ball Rock. It's straight through meal, and when it comes to actually delivering, startup owners do have their own internal book. They know the practice of how to deliver with the scheme out to the actual clients, and that's what we do every day. So there are some microphones on the front row. If you've got a question, if you don't mind interrupting us and put your hand up, and then get hold of the microphone, and then what we'll do is we'll take those questions as we can. Is that okay? Please, feel free.
Yeah, just a quick one. What's the criteria? Do we need to be trading, or are we the purely startup company yet to trade?
So the broad criteria that we will put on our website is started within the last 3 years, but that can be, it's very nuanced. There might be gaps in trading, there might be test trading periods. So it's around that. If it's been 10 years or so, then probably you're not suitable for a startup loan. There will be many other funding options available through the British Business Bank. The startup would not be one of them.
So just to jump in, to answer your particular question, pre-start, absolutely. Those help people to start as well as...
Oh, absolutely, yes.
Get through their first steps. So startup loans are kind of like the next step. So the next step might be from the idea into reality, or it might be you've already trading and you need a bit of a push on to go into the next bit.
Are there loans?
Yes, there are. Many of those are delivered through external delivery partners. One of the new ones is called the Community Enable Fund, and the bank has delivered funds to various community organisations to actually lend to more in a scale-up size. So that would be up to 150,000, maybe a little bit more.
Thank you. So what is your actual business?
We are a software writing council, write environment relation software.
And this is the UK trading opportunity.
The actual client is one Pacific Islands. We're a supposed fuel Australian and UK-based company. We've got offices here and we've got offices in Australia.
What about that, Nancy? That's an interesting one.
Yeah, it does have to. It needs to be a UK focus. Obviously, it's UK government money. But I mean, I'm talking from the startup loans perspective, which don't tend to have international sides. I mean, some do. There are some import-exporters, but mostly it will be a UK-focused business. But for funds like Community Enable Fund, that would be entirely different.
Let's talk after. Will we talk afterwards?
Yes, I'm not the expert on Community Enable Fund, but I can point you where to go at the actual.
Thank you. I think just from listening there to yourself is if you get the microphone, it seems to be that you have to have it right up close, otherwise we can't hear you. So just sharing for the rest of the people who've joined us recently. So if we talk about actual startup loans and who they help. So although the background originally was back in 2012 was about helping young people, it's now gone further afield since then. So how would you describe kind of typical? I said there isn't typical. We both know there are so many different types. But what kind of people can benefit from the startup though?
So in a phrase that's bandied around is those furthest from finance. And there are various sort of demographic type metrics that we would publish, and we publish on the website. Doesn't mean, but they're the type of groups that we really want to push forward. So particularly female entrepreneurs is a big one. Ethnic minorities is a great focus on, and people who are unemployed, and getting them out of unemployment and being able to start their own business. Doesn't have to be that. There are some people who, are in full-time employment who decided to stop and start their own business. But particularly, there's always been a social purpose behind it, and that social purpose is very, very important to startup loans. And I would always describe it as a social enterprise. It's a not-for-profit lending. Any interest that is received from the loans plows straight back in to lend to other applicants to start more businesses.
Thank you, Anthony. I think when we talked a little bit earlier, when we talked about how much has been lent, it says about 1.2 billion. That's kind of like money that's been recycled multiple times, because if somebody's got a loan term of 3 years or 5 years, if they rented 10 years ago and they've paid it back, that's obviously gone back out again, hasn't it, multiple times?
Correct. It's not a money making scheme. It's not a grant scheme. It is a personal loan with obligations to repay, and where a commercial enterprise, it would wash its face. It doesn't generate profit, but what we do get back goes back in. It is still essentially grant funded from the government.
Thank you for that. So you touched on personal loans. So we're a broker ourselves, so we hear a lot of people talking about different types of finance to start, to grow, to buy businesses. And this also, in a smaller way, does all of those. And a lot of people talk about personal guarantees, and then we say, well, it's a personal loan. Can you share with the people here what differences between somebody who is in a business and has a personal guarantee compared to somebody who's got a personal loan?
It depends how enforceable the personal guarantee is. I think with a personal guarantee, I don't know how finance savvy you guys are, but there's sort of stigma to it. If you give a personal guarantee, people feel in their heads, well, my home, my income, whatever it is, might be at risk. There is no such thing for a personal loan. There is an obligation to repay. It's a personal loan like you would get from a high street lender, essentially. It's Consumer Credit Act regulated, but it is on standard repayment terms. It is a personal loan, but there's no guarantees. There's if the business fails, it will be the same sort of remedies that you would have, long-term repayment plans. If there's hardship or illness or something, it would probably be not cancelled. If we're not a hardline lender by any means.
I think that's an interesting thought process for people. Is when people come to us and talk about, well, I don't want to sign a personal guarantee, and in some ways we switch it around and say, oh, you're not confident you're going to make this successful. You're not back yourself. Is the element of the personal guarantee there to frighten you, or is it to reinforce your own commitment to this? Because there's an element to, if you want a grant, people are saying, I really want a grant, and the issue with that is there may be a lack of confidence in how successful this could become. So it's not about free money, it's about the element of risk. What happens if it goes wrong? Will I have to pay it back? But with a grant, you don't. I think, to be fair to Anthony, saying that it's a personal loan, and in the long term it could get written off, but ultimately the way I look at it, and we tell our team, is look, if you don't pay this back, it isn't the fact that you don't pay it back, it's the fact that money can't get used again. This is recycling money. It's taxpayer money. It's our money. So what we say to everybody is, look, in borrowing this money effectively, that you are paying taxes back into the economy. And on that point, it's been a very, very successful scheme to date. What's the kind of returns that there's been?
So we will do annual evaluations, and I think those evaluations are publicly available on the websites. And at the last one, I think for every pound that was lent under the startup loan scheme, it generated £5, around £5 for the UK economy. So that's a pretty good ratio, and equally is testament to, you know, we will all know with the startup business what the environment, what the failure rate is like. How many are successful and end up employing numerous people and going on to bigger and better things and moving up into the scale-up market, proper, like the community enable fund that we mentioned earlier.
I think that's really useful to know, because I think if you look at just on the numbers, 5-to-1 return, that's an absolutely fantastic indication of how successful this is. So how do you get those returns? Well, I've got some ideas. Maybe you can just reinforce or challenge some of these answers. So if you imagine, so early on we talked about it's hard to reach people. So those could be people that are in communities that are hard to reach. They could be people that were previously underemployed or unemployed. So underemployed could be a homeless gap, for example, or it could be somebody that's been a student and they haven't quite got into the working environment just yet. Okay, but when it comes to unemployed and they've been unemployed for a while, what this does is it helps them not only to establish something that's of benefit to them, but at some point it may mean that they don't need to receive benefits from the government anymore. So it replaces the benefits because they're creating their own income. It also means that possibly the same people and other people around that do get startup loans are employing other people. So now you've got creation of jobs. So the creation of jobs is reducing benefits taken from the state, and also adding back taxes are paid back into the state. I'm not being politically clear. I'm just saying this is a continuous process that's happening. It's reinvigorating areas that might struggle with access to finance, whether that be in locations that don't normally get attention, but also people that may not feel they get attention as well. Not fair?
Absolutely fair, yes. Yeah.
So if you looked at other things about what's unique to startup loans, so what kind of things do you think that startup loans do that other funding or other finance providers can offer?
I think the main one is going back to this furthest from finance. So quite simply, we will provide something to people to start their businesses where they simply can't get it anywhere else, or if they can, they're paying, you'll be paying some sort of egregious interest rate. So startup loans is at 6%. So 6% for a business-focused loan, albeit a personal loan, is very, very competitive in the market. If not market leading, I would have thought, for business.
So if you look at 6%, so 6% is what's used in finance, is called APR, an annual percentage.
Percentage rate, yeah.
Annual percentage rate. Well, actually, into flat terms, how much does that mean? It's actually 3.18 or 3.2%. And if you think back to those, you can remember bounce back loans, those were 2%. So this is only just 1% above that. These are very low cost finance.
But the reason that an individual might not be able to get finance might not be to do with their personal credit history. That's one of them. It might be having a limited track record. It might be being new to the UK. Providing that there's a right to work in the UK, then absolutely you are part of the population we'd love to see apply. But also with startups, it's very much about until it's established. The high street banks and mainstream lenders won't have the confidence in you that you perhaps have in yourselves. And startup loans is all about really starting that, building that confidence, building a track record. And then once the business is up and running, there's opportunities to come back for second loans to startup loans, or alternatively move into the other British Business Bank financial options, or indeed go to the high street lenders once the track record is established.
Yeah, I was just going to ask that 6%. Is it a flat rate or it depends on the loan purpose?
No, absolutely flat rate. Yep.
It's fixed.
Single rate.
Fixed for the whole term. Doesn't change. It's not variable. It doesn't, like when people have mortgages, you might have a variable rate. So if the Bank of England rate goes up or down, and you adjust to that, this stays at one fixed amount. So you know exactly what you're paying every single day.
It's been 6% since it started in 2012. That doesn't mean to say it will always be 6%. We are, our masters of the government. So
just
Saying I work in an NGO where we basically support ethnic-owned businesses. So are there criteria to people you give out loan to, or are these people eligible as well? Ethnic-owned businesses.
Potentially. I mean, it's a very broad church. So without looking at individual applications, what I would recommend is that you have a look at the website where there's a whole lot of information about eligibility and criteria. I think my email address on the site.
Unfortunately not.
I'm quite happy to give you my email address if you've got any further questions, because without a lot more detail, it would be foolish of me to say yes, no. So I'll give you a very strong maybe, probably yes.
Very helpful. I had in mind of having a chat with you. Yeah. Thank you.
Thank you. Okay.
Yes, grace period that we give.
Could you put your microphone a bit closer?
Is there a grace period that we could give from when issuing the loan?
Yes, there is. So,
How much?
so we will get what we call a capital repayment holiday. So no capital. I think the interest still has to be paid, and that could be up to 6-12 months, I think.
Yeah.
Or the loan starts before we start.
Yeah. So if we looked at in principle, what kind of period would you be looking for? If
6 months.
Okay, so 6 months. So let's just say you borrowed money for 5 years. The way that it would work is that you would have 6 months of interest only, and then you'd have 54 months of what would have been a 61 flow term, and you divide the amount into 54 instead of by 60. So it increases the payments after 6 months, but within the same kind of term play.
Yeah, and it very much depends on the reason why that's the right thing for you. If it is that you want to borrow, I mean, just numbers out of the air, £20,000, but you only need £10,000 right now, we could do that in 2 stages. So we could give you £20,000, but £10,000 to be drawn down now, and a guaranteed £10,000 3 months down the line, if that's what suited you. So tailor the repayments according to the affordability that is in the business at the time that you get funds.
Okay, thank you for that. So have you got any more pressing specific questions? Otherwise please. Okay.
Is it possible to add funds if you already have an investor involved in the business privately?
Yes, depends. I mean, other eligibility criteria apply, but yeah, it doesn't rule you out. Absolutely not. No.
So just on eligibility and ownership. So we often see applications come in where there may be 3 or 4 people inside of the business. So let's just say there's 4. Make it easy. 4 people. 4 people, and they've each got 25% each. So what would be the criteria for those kinds of applications? So can one person apply?
Yeah, one person could apply. 3 could, in that scenario, 3 could apply to any combination. What we say is the person who receives the loan needs to have some sort of controlling. When I say controlling, I don't mean absolute control, but some sort of major influence control in the business. So if it was 4 people, each with 25% of the business, clearly they've all got equal control. If one person had 90% and somebody wanted to apply for who had 10% control of the business, that might be outside the realms of our appetite. It needs to be almost owned and driven by an individual or the individuals who are applying for the loan. Does that make sense, Gary?
It does. I think under our experience, I think we're always driven, and one of our teams just joined us and yet towards the back, is that we're always driven to have at least 50% shareholding within the application. So it's either one person with 50% or more, or two or more people with 50% together. And the reason that we see it from a practical situation is that we want to know that if something goes wrong, or if something has to change, that the people borrowing the money aren't left holding a debt of their own and don't have any chance to do anything about it. Because as we know, things happen in business when you get started, and as you're going in the early years, lots of things change. So you need to be in control of that, so you can be assured that you're able to make the repayments. Because ultimately these are loans, we want to know you're going to pay it back in the nicest possible way. Okay. So in terms of, you talk about some uniqueness. I think there's one key uniqueness that I'm aware of that you don't see in any other finance provision. So we do it in terms of the free loan support, which is helping people and giving them guidance and advice, and sometimes saying to somebody, it might not be right now to do this, you're not quite ready, or it may be that we'll help you work out what the best amount is, because a lot of people, when we see them for the first time, we ask them how much do you want to borrow. They go, well, what's the maximum? And they go, it's 25. I go, well, I'll have 25 then. It's like, well, it's not quite straightforward as that, because you may not need 25. And if your business can't afford to pay it back, you're then left with the debt that you can't afford. But going beyond there, what other supporters are available?
No, well, absolutely, that is key. And I mean, there's a map on there of the UK. And showing the distribution of our delivery partners. So once somebody applies for a startup loan, they are allocated by geography to one of those delivery partners, and then that partner will talk anybody through the niceties of their business, what they need to apply, how to do a cash flow forecast, how to do a business plan, all those sorts of things. So there's a great deal of education in there as well. I think Startup Loans also has, I think it's called Learn with Startup Loans, which is associated with the Open University, and there's a lot of advice on there and guidance about how to start a business, how to grow a business, all those disciplines that you would need to actually make your business successful.
And are those free?
They are free, absolutely free. No charges whatsoever with startup loans. If anybody ever applies for a startup loan and somebody charges you, let me know, because it's wrong. And
it's fair to say. So you get more than the finance for startup loans. You're actually getting people there to help you to test your own ideas and to give you feedback on what it is that you're doing. There is also, beyond the startup loan itself, once you've got that applied, what comes after that?
Yeah, after that we do post-loan support, so that is also free for a number of years, and that's done by a separate partner, but they have one-to-one business advice, webinars, a dedicated platform, all sorts of things. It's a bespoke platform for startup businesses to just get all the help they need to survive. It'll be kick-started with the loan. You kick-started your business, just keeping it going, making sure you're doing the right things, going in the right direction, and somebody to talk to who is business savvy. Really, that's also just very, very valuable. Just ongoing wraparound support.
So just across the audience then. So who is actually thinking of starting a business or recently starting a business? So most people, yeah, and you're guiding people that are looking to do the same thing, yeah. So in looking to start businesses, so who here is a cash flow expert, cash flow forecast expert? Well done. So this is the guy to come and talk to. But seriously, you will understand yourself that when people are looking to do forecasts, a lot of the time it can be a big barrier to them to actually apply, because they think, well, what's going to happen when I go in there? I don't really know the numbers. Numbers is not what I do. So it's really important that you understand this, is that that's what we do every day. Anthony's talking about the wider organisation, but as a delivery partner or business support partner, And if you want to speak to somebody specifically, there's Sinead, people can look Sinead. So Sinead helps people every day with cash flow forecasts and business plans and how to get things going on. And I think it's really important that the uniqueness of startup loans is reinforced with the support, not just the money.
Yeah, as I said, it's a social enterprise, and again, that might be another barrier why mainstream finance is not available, because there's always that you'll put together a cash flow forecast, somebody behind a screen will look at it and go, well, that's not very good, is it? Decline. Whereas with startup loans, there's that ongoing dialogue, there is that support. You could be coached to do your cash flow forecast. You could put in your best effort, and someone will talk you through, not from a critical point of view, saying that doesn't work, but you need to do this. You haven't put this in. Have you considered this? This is how it works. There's templates available as well to actually help get you started. But
so yeah. So you don't help people, Sinead, do you at all, on cash flows? All the time. Yeah, absolutely. And sorry, yeah?
Another quick question. Is that support ahead of an application? Is it possible to get support before applying for a startup loan?
Probably with application. So the way it would work is you would apply for a startup loan via the Startup Loans website. It's a CCA regulated personal loan, so we have to do credit checks. They're not particularly stringent, because otherwise, given the people that we are here to support, we wouldn't be lending to anybody. But it's just to check that people are genuine. We have to do things like fraud and financial crime checks. It's the law. But once that has gone through, then the application is allocated to one of our regional support partners or one of our national partners. So Gary, Biz Britain, supports nationally. I manage a support partner that is within British Business Bank that is also with a national focus, and that's the point at which we would engage with the applicant and make sure that the application's up to speed. And generally, all of the things being equal, I think 90 days before the application has to be refreshed, but generally you would see 2-3 weeks, depending on how prepared the applicant is, and that's a big thing. So some people will just apply with an idea in their head and not much other. Other people have got a really good idea about what they want to do. They've got a business plan. They know how it's going to work. They might not have the best cash flow in the world, but they've done something and they know broadly how the business is going to make money. So it's broad church as to how long it will take to get the funds, but it can be very quick. And when people apply, there's quite a few applicants who will decide not to proceed with the startup loan, not because there's anything wrong with their idea, because they realise they're not ready yet, and they could come back in 6 months. So many of the people who don't take the money first time around will come back and apply again, and then they're really ready and really prepared to start their business at that point, and many of them be very, very successful.
Thank you, Anthony. So let's get a little bit deeper into some of the questions that people would like to know. So let's go into what cannot startup loans be used for. So can you
Good morning and a warm welcome to day 2 at the Festival of Entrepreneurs. We're about to kick things off on the keynote stage in the next 5 minutes, so if you can make your way over for the beginning of day 2.
Okay, we've got 4.5 minutes before you all decide to rush off. So what kind of things, give some examples of the typical applications that you would see in startup loans.
There's no such thing as a typical application, Gary, as you well know. Some of the things we can't support, some of them are obvious. We can't do firearms, we can't do drugs, we can't, etc., etc. However, we could end anything that's legal broadly, but we wouldn't support a loan for repaying your debt. It has to critically go to starting up the business, be part of the be part of the finance that is needed to get that business off the ground or develop that business from its early days.
Okay. In terms of, because we've come across this several times where people have come on and said, well, I've already invested 10,000 into this part of my business. Can I have some money to pay that back?
Generally, the answer would be no, but it's not impossible in some cases. It depends. It very much depends on the circumstances, but the broad rule of thumb would be no.
That's fair enough. And I think it's important that people understand these things. So we can't refinance what we've already got. Don't bring us a credit card bill and saying, I'm paying 30% on this. Can you pay this now at 6%? That's a definite no. And also the other thing that we are aware of is it's over the years we see different people coming. They're starting businesses based upon a new trend of doing things. So up until recently, there were a lot of people doing Airbnb, rent to rent, and whilst in principle itself, there's nothing wrong with that. I think the other thing is, and you could use it for the purposes of buying the furniture, and actually you could use it for putting down the deposit. You could certainly do that. What you can't use it for example, is if you're looking to have a buy to let, to do a rent to rent, you want it as your deposit to buy the property. So it can't be used as a deposit for other finance. So if it's linked to a mortgage or linked to another finance where they say we need 10%, and just so happens you're borrowing 250,000 and this is 25,000, you're thinking, bingo, I've got free entry into doing this new business, and I've got a property as well. Unfortunately, under those circumstances, that's not going to fly. So I wouldn't go through the process of applying for something like that. That's fair to say. Okay, so in terms of so what kind of things could applicants? So we've got a room full of people here, of which some of them may decide to apply. What could they do to improve their chances of success?
Well, there's a difference between success and speed getting the loan, but preparedness is the key. Be prepared. I mean, a personal loan is a binding commitment. So be very sure about your business. Have confidence in yourselves. But make sure you know what you're doing. Be passionate about what you're doing, and because that, as I say, there's wraparound support. You'll be talking to a business advisor, and that passion that somebody has for their idea is quite often infectious, and that will go on to actually transmit the likelihood of that business succeeding. And the more likely a business is to succeed, the more likely we are to fund it, to be quite honest. But preparedness is a big thing, and just having an eye on, it's going to be hard work. It's not going to be easy. It's not something to enter into lightly, starting a business. It's fantastic when people do, and it's even more fantastic when they succeed. And most people who get startup loans do succeed. So that's what I'd say, really, guys.
Yeah, I think it's just to expand on that a little bit further. So, when we're assessing applications, what we look for is validation. So, who else is interested in receiving the products or services that you're looking to offer out there? So, if it's in your head and you haven't spoken to a single person about it, we'd probably say, might be worth you going and testing it out somewhere. Go and find out if somebody else is interested in receiving this service. Now, a lot of people will say this is absolutely unique. It's never happened before in the realms of reality. There's a 90% chance that it has somewhere else. It might look a little bit different. That's okay. But it's probably been delivered in some circumstances somewhere else. There's not to say there aren't unique opportunities and unique ideas and unique propositions. Absolutely. But what we'd say is go and test it out there. So what does a testing out look like? It could be that you start off. A lot of people, they don't like hearing no. So the first thing they'll do is they'll go on the internet. They'll get big picture information. There's $1 billion worth of marketplace for this in America. and go, well, you're not supplying to America, so what can you do locally? So it's a case of, well, if you're going to do desk-based research, it's maybe doing a little bit more than going on to ChatGPT. However, I'm not going to say you should not use ChatGPT, because ChatGPT is very good, and it will find you a lot of information to support your application as well. And it is something that we encourage people to do, because if you don't know a lot about marketing, it's a great way to find out, just to go and ask somebody else. But to test in your services, your products, go and ask people that are already buying it. We're thinking of supplying this. You buy these things. What kind of things are you looking for? And if we were to bring this to you as an alternative supplier, what would we have to do for you to change from where you currently are? Now, you're not asking them to buy necessarily, you're asking to buy into the idea. So it's a softer approach. The next levels of validation are anything from letters of interest. You've actually done some prototypes, somebody's bought your prototypes, you've actually started supplying the services, you're already supplying the services, or selling the products, you're already making sales. You're already making sales and you're already getting payments. So validation starts off from the idea all the way through to running the business. So startup loans currently go to, the first ones can go anybody that's been talk 3 years of trading, and there are second those that go up to 5 years of trading. So it does cover everybody from ideas through to fully operational. Okay. In terms of other things as well, some things that we come across. So we come across people that are looking to buy a franchise. So they're buying somebody else's proven ideas, so you can use them for that. And also people are buying businesses. They might be relatively small businesses, and they want to buy a business, so they've got a local cafe who's looking to sell, and they say, why to buy that cafe? I've got some of my own money, and I need this extra to top myself up. But it can be used in things like, we call it working capital, but that could mean a number of things. What kind of things working capital for you?
I mean, generically, it's the funds that the business needs to keep going. So there might be an element of early stage wages before it generates profit. Rent. So the things that are endemic to actually getting the business going, stock, all sorts of things. I mean, it's interesting. Gary talks about franchises, and that's yes, we do support franchises. And there can often be very, very good businesses, as Gary said, they're proven. However, there are franchise sellers out there, and my warning to anyone looking at a franchise would be that in many instances they're interested in the profit that they will make and not the individuals who take the franchises. And we do come across some quite aggressive selling tactics from franchise owners who are perhaps overselling a particular franchise in a particular very small geographic area, where quite frankly there is no chance that 3 businesses doing the same things will succeed.
So is it fair to say that we're not just looking to distribute money, we're also looking to act responsibly on behalf of the applicants?
Yeah, absolutely, yes. We have a duty of care to the applicants to make sure that it's affordable, that it's not going to put them in a situation that is untenable going forward. Equally, we have a duty to protect taxpayers' money and not give it away irresponsibly.
Okay.
So balancing the two.
Thank you. I think we're being given the. So I thank you very much for you coming today. I appreciate for those that have started with us and stayed with us, and I hope you have an enjoyable rest of your time here. If you do want to speak to us, Anthony will be around. But if you do want to come and talk to us more, we're on D3, just 2 steps away over there for Britain. So thank you for your time.
Thanks for watching this special episode from the Festival of Entrepreneurs. Our mission is simple: to help founders and business owners grow faster, think bigger, and take action. And if you were part of the event, thank you for joining us and being part of the community. And if you missed it, don't worry. We'll be back with even more ideas, inspiration, and opportunities to help you take your business to the next level. You can find out more and register for future events at festivalofentrepreneurs.co.uk.